So what do we mean by wholesaling? You are now buying things less than what the market would have. For example, if you went and bought it retail. It's the idea that someone like a wholesaler is going to focus and become a transactional engineer. And what they're going to focus on is actually looking for deals. They spend all of their time looking for deals. If you did one deal a month, you could make a good, $120,000 a year. And if you did two deals in a month, you could make $240,000 a year. So what do we mean by wholesaling? Okay, so the word wholesale, when you think about for example, Costco. You go to Costco and you're buying things almost at wholesale. So basically, you are now buying things less than what the market would have. For example, if you went and bought it retail. So if you go to Walmart, for example, Walmart is retail. The price would be more than if you bought it at Costco because they're more of a wholesale. And so that's where the term comes from. It's the idea that someone like a wholesaler is going to focus and become a transactional engineer. And what they're going to focus on is actually looking for deals. They spend all of their time looking for deals because we talked about it before. How are you going to be doing deals? It's going to depend on you. So you may start with using other people's money, right? Other people's money. We talked about that before. We talked about leveraging other people's credit. We talked about, this idea that if you are starting out, maybe you're 21, 22, 23, you don't have a credit history per se. And so you could leverage someone else's qualifying power in order to get into deals. And then lastly is the other people's time. And here is the key here, okay? For someone like me that I'm always conscious of how I invest my time, I'm looking to leverage other people's time. And so basically, when someone decides that they want to be a wholesale or they want to do a wholesale deal, I'm actually leveraging their time because someone has taken the time to go and pursue deals, look for deals, put deals under contract, negotiate the deals, and now I get the ability to actually get into a deal without having to search for the deal, without having to work for the deal, without having to negotiate. So me, the investor that has the capital, I have the capital and I have the credit. I actually can tap into someone else's time, and to me that's a benefit. And so this is why, for me, a big strategy of how I find deals, it's usually because I don't mind paying for someone else's time, okay? And so the average 96% of the people out there, they take their time, so their most valuable asset, and they trade it for money, okay? So your most valuable asset that you have is time. And so what the wealthy know is that time is the most valuable asset. So they take money and they buy time, right? They buy someone else's time. And so this is only a certain amount of people can do that. And eventually this is where you want to be, right? But now, at the very beginning, when you're getting started, wholesaling could be, and it doesn't have to be, it could be a strategy that you may want to apply while you're building up your money in order to actually get in a situation where you're actually buying someone else's time. And so here's what I have to say about wholesaling. Okay, these are things that you need to keep in mind, and we'll get into how it works in the PowerPoint. But this is very market specific. Okay, so and I'm going to go here and I'm going to emphasize seller's market. Okay, back in, like, I'm going to take you back to 2007, 2008. We had everybody wholesaling. Everybody and their grandmother was wholesaling. You know, it was so easy to do. Anybody could do it. All of those, you know, all of those wholesalers disappeared after 2009, when nobody, when there was a market correction, and there was a dip in prices, and the U.S. market crashed. No one wanted to know about real estate. No one cared about real estate. And so all of these wholesalers, all of the wholesalers disappeared. They're nowhere to be found. Not even one of the wholesalers or the wholesaling companies that were around in 2007 and 8 and 9 exist today. What does this tell you? It tells you that it's a strategy that is very market specific, right? It's very specific to a particular market, and it's in a seller's market when it's harder to find deals. If you can have a strategy where you actually go out there and find the deals, put the deals under contract, you can always leverage. Those deals in a hot market. But number one, it is very active. Number two, there is a lot of liability attached to it. So in my opinion, and this is my humble opinion, if this was something that you said to yourself, hey, I want to be a wholesaler for the rest of my life, I would say, well, you know what? You maybe want to find other strategies. So I would always say, when it comes to your real estate business, forgot the estate part. When it comes to your real estate business, this would be, wholesaling could be a division. Okay, you can have a division of wholesaling. Wholesaling could be a division, but the idea should be, okay, is to create capital in order to get into multi-family deals. Okay, so I would not do this as a long-term strategy because it's too market specific. And so when the market turns, there goes your business. And so you have the opportunity right now to do a few deals and to use that capital to put it into actually some long-term, right? So I'm going to say wholesale is a short-term strategy, but the idea is to get the money to go into buy and hold. Buy and hold is where you're going to find the wealth. Okay, so you take the active wholesaling strategy, and then you throw that money into buy and hold. Okay, so I've seen it online, a lot of YouTube videos. You know, you have a lot of wholesalers, and they're out there, they're flossing the money, they're having a good time. Hey, look, we're doing wholesaling. That's very short term, because what's going to happen? They spend all the money on the clubs, on the cars. They spend all the money on all the jewelry and looking like you're wealthy. But the second the market turns, okay, when we go from a seller's market to a buyer's market, all of that will be gone. All of the people that flossing the money and the this and the that, all that will be gone, and those people will have to go back into the workforce. Okay, and I've seen it. I'm telling you from experience here. And so the idea is to leverage where we are right now. If you could do some wholesale deals where you can actually leverage those wholesale deals. Instead of buying the cars, the jewelry, the trips and all that stuff, take the capital and throw it into multifamily, into buy and hold multifamily. When the market corrects, and now we go into a buyer's market, boom, you now have some real hard tangible assets that are going to be cash flowing and are going to be able to sustain you, and you can weather the storm. And so what do you need in order to be a good wholesaler? Okay, what are you going to need? Well, number one, what is wholesaling? What is it? It's simply an assignment of a contract. So I have a contract. I'm assigning it. I'm going to assign my contract. So I find the deal, I negotiate the deal. So we see this, this little triplex. Okay, this little triplex. We find this triplex. We put it under contract. Okay. Under contract. What does this mean, under contract? It means you have an offer to purchase agreement accepted by the owner of this triplex. Okay, so we're going to say this is a triplex. Okay, so you have this offer, this under contract. Now you need to have an assignment clause in your contract that gives you the ability to assign this contract to another party. Okay, and so now you assign the contract to another party. So over here, this is me. I put the deal under contract. And then over here, Talia says, I like that deal, this triplex. This is exactly what I'm looking for. How much do you have it under contract for? Well, we have it under contract for $600,000. Okay. So Talia says, well, I like that. I said, okay, well, I'm going to take a $20,000 fee. Okay. This is going to be called assignment fee. Okay. Assignment fee. And so now we assign the contract to this party, a new party. Talia now has it. And then Talia will close. She will close. On closing, she pays the $600K to the seller, and I will get that $25K assignment fee, right? Assignment fee. And so it's very simple. It's simply you're selling a piece of paper. You're flipping the paper. You are buying something at, X amount of dollars, and then you are assigning it to a new party, okay? Relieving yourself from being, from this deal. You're no longer a part of this deal. Now, another person takes on this deal. So, what do you need in order to do this? First things first. You need real estate IQ. You need to know exactly what you are doing. You need to know how to negotiate. You need to learn how to put deals under contract, how all of this works. By the way, this is exactly what we teach you, whether it be in my program or Talia's program. By the way, if any newbies here want to be part of our programs, just make sure that you reach out to Talia directly. Talia, can you throw in your email in the chat box? But this is exactly what we do. We focus on increasing your real estate IQ. And the idea is that you become a transactional engineer. You know how to put deals together. You know how to structure them. You know how to put in the offers. You know what numbers look like. You know what numbers need to look like for other potential investors, okay? So you need to have the knowledge. Without the knowledge, it's going to be very difficult for you to find any deals. Number two, okay, and this is going to be very important. Number two, you need to have a buyer's list. Okay, so you got to go out there into the marketplace and you're going to say, hey guys, I'm gonna be doing wholesaling. I have access to lots of deals. I want you guys to join my buyer's list. Okay, and so this is going to be some marketing. You're going to have to do some marketing to attract potential buyers, right? So the way it works is once you put a deal under contract, what you want to do is actually, you actually want to share that deal with your buyer's list. So you get, because this is, here, if we go back to this, you put the deal under contract, you have a conditional period, right? It's a conditional deal. So let's call this 15 days. So it looks like you have 15 days, but really you have more like 5 days. You have 5 days to find your buyer, and then they have to do their due diligence. They have to qualify for the financing, and they have to qualify they have to do their inspection. They have to do their due diligence. So you don't have a lot of time. And so what you want to do is create a situation where if you have a deal, you can send it through your list and say, hey guys, I have an opportunity. Could be a newsletter. You're just sending opportunities, and that could be one way. The other way is to tap into someone else's list. Okay, so there's a lot of wholesalers out there that have already created lists. So you can say, hey, can I use your list? And then maybe you split the fee 50-50. That could be one way to do it, right? Now, you also are going to have to have you have to create marketing to I would say find deals, aka deal flow. You need deal flow you need deals to be coming in so you can analyze deals. Some deals might make sense, some other deals might not make sense. You have to gain that experience, and so you need to be able to create a strategy, a marketing strategy, so you can find the deals. Okay, and so how will we find the deals? Okay, well, the best way to do this is let's go here, deals. We're going to say number one, off market. And there's lots of off market deals that you can find. You can do a yellow letter campaign. Yellow letter campaign. Basically, it's a letter that you are going to create. Talia has access to one. We have access to them in our program. We show you how to do them, structure them, deliver them. You can do a yellow letter campaign where you actually are actively going and putting letters in people's mailbox, hoping to have those people contact you so you can actually have the opportunity to not have a real estate agent. You actually have a private sale, and you have more time to put something under contract. So that yellow letter campaign is key. Number two, I would say you can work with Canada Post. I'm going to put here CP Canada Post, and you can send out letters. You can mail letters to neighborhoods. Mail letters. And those letters, they could look like the yellow letter campaign. Talia will show you what that looks like. But it's basically, you're actively pursuing potential buyers sellers that don't know that they're sellers yet. Okay, and then other ones could be FSBO, for sale by owner. These are people that list their properties for sale on Kijiji. They're trying to not pay realtor fees. And this could be an amazing way for you to go in and talk to the seller directly, get that experience, and then put something under contract, okay? Now, when we talk about our market deals, these are gonna be a little bit harder because you have to now get really, really good at talking with agents. First things first, you need to understand that agents are not going to be happy about you wholesaling a deal. And I don't want you to feel like you have to be dishonest, but you do need to be smart about the way you approach an agent to not give them the idea that you're actually trying to wholesale this deal. So you're going to have a deal on market. It's going to, and of course, in all of your contracts, it's going to say your name and or assigns, okay? And or assigns. This is the assignment clause that's going to go into your agreement. And so this assignment clause and or assigns gives you the ability to assign the deal to another party. Now, this and or assigns, you're going to get pushback from realtors because they're like, no, we don't want to have that and or assigns. So here is one explanation, because the explanation that you're going to give the agent shouldn't be, hey, I'm going to put and or assigns because I plan to wholesale it. No. Agents are going to say, no, we don't want to participate with that. It's not what we want to do. They'd rather not sell the property than try to do a wholesale deal, not because you're doing something wrong, because there's been so many amateurs doing wholesales that they mess up the deals, they can't close, they tie up the properties for a long time. So agents, they just don't want to deal with that, okay? And there's nothing wrong with that. So what you want to say is, hey, the reason I'm putting and or assigns is because I plan to assign this deal to one of my corporations. And I have not chosen or I have not decided if I'm going to form a new corporation or I'm going to have a fresh corporation. And so this is fine. I think that's a logical reason why they would allow the and or assigns. But and you have to be careful. You got to go into the Schedule A of the offer and go through the document. Sometimes the agents they'll give you that clause that you can assign, but they'll make you liable, right? So the liability transfers to the new party, and that's not what you want, okay? So you want to make sure that you can assign this, where you can transfer the liability to the new entity, to the new party that's going to be taking on the contract. You don't want to stay with that liability. So either off market or on market, I believe you have all the power. I would say this would be number one. This would be number one. You want to go off market if you want to do wholesaling, if you want to do it in the right way. So you finally put your deal under contract, and then if you have a really strong buyer's list, you can put it through your buyer's list. You should be able to do all of this within the 5 days if you have that intellectual currency, and if you always keep in mind that the focus needs to be you're doing this as a way to raise capital in order to get into a longer term strategies, right? So it could be a good way to make a good, $20,000 to $30,000 a transaction, provided you know what you're doing, and that could be some really good cash flow, for the meantime, while you're trying to, get your credit together, find investors for your long-term deals. I still do some assignments. So how do I do them? Well, you know what? There's times that I want to do a deal, and for whatever reason, something else pops up, and that looks more lucrative. So I actually say, okay, you know what? I'm just going to assign it to another investor. I'll find another investor, and I'll say, hey, you want to take on this deal? I don't have time to pursue it because I'm doing something else. And so I assign. Maybe I'll do it for $10,000, $20,000, $30,000, and I'll assign that deal. I'm going to share my PowerPoint here with you guys. Christian, could you give me the ability to share? And then we'll take some questions, and then we'll go right into we'll take some questions, and then we'll go into our high level. Okay, good. Our high level mastermind. And so here, what we have for you is just this little PowerPoint here. Of course, wholesaling is the subject matter, and that's what we're talking about today. If you are interested in going to the next level, a lot of you already are in a lot of in our programs, but it's a really good strategy to learn and obviously use right now while we're in this seller's market. Okay, but this is just like a little scenario, right? So you find a deal where the market value of that property is actually $379,000, because you know what you're doing, and you know how to how to structure deals, and you know how to negotiate. And that negotiating component is actually what we teach you in our program. But you actually get an accepted offer of $331,000. Okay, so I always tell people, any student or anybody on any podcast, whatever that I do, is that in real estate you actually make your money on the buy. And so from the 331 to the 379, you actually created about $48,000 in new value in equity, because if the appraised value of that property is $380,000, and you manage to get it under contract for $330,000, the difference becomes the equity that you've already built by buying that asset. Now, here's a key thing to understand. The deal is conditional, and it's going to be conditional on inspection, financing, walkthroughs, reviewing the income and expenses. And so in that conditional period, because you set up the contract the right way from the beginning, remember I said your name and or assigns, that and or assigns is actually what gives you the ability to assign the deal to another party. During that conditional period, you actually have the ability to find another party where you can assign the contract. So, let's say you have a buyer's list and you send it through your buyer's list. It's like, oh, we got this amazing property. The appraised value is $379,000. We have it under contract for $331,000. And so what we're looking for, and it's just an example, is a $10,000 assignment fee. Okay, so you basically you're selling the opportunity, right? You're selling that opportunity to another party for $10,000. Now, why would the other party buy that asset from you? Well, time. You took the time to find the deal. I don't have the time to look for deals, and I'd rather pay you $10,000, and I'm still going to have a built-in $38,000 of equity. So for $10,000, I'm actually gaining $38,000 in new equity. So to me, as an investor, that makes sense. That makes a lot of sense. And it makes a lot of sense during a seller's market where the inventory is tight, and everybody's going to realtor.ca, but that's the same watering hole that everybody's going to. People now gravitate towards wholesalers, it makes sense, because the wholesalers have put in the time to not only find deals and put them under contract, but also offer a better deal than they would go to realtor.ca. Now, all of this will shift as we go into a buyer's market. And when we enter a buyer's market, you can go to realtor.ca, and there's going to be a crazy amount of real estate, and everybody's going to be negotiable. And so at that point, the wholesaling is going to be over, right? Because it's very market specific. Do people still make money during a buyer's market in wholesaling? Yes, they do, right? But it's going to be extremely time intensive. And this is why if you're going to practice this strategy, it should be short term. It should be an add-on to your real estate investing firm. So another division, an arm of wholesaling where you can just, make a little 10, make a little 20, make a little 30, make a little 40. I mean, I've paid like $40,000 for deals before. So there's nothing wrong with this strategy, except that it's very market specific. And so if you did do this, if you did want to do this and you did one wholesale deal at $10,000, which is extremely low, especially in what people are doing today, you could make, if you did one deal a month, you could make a good, $120,000 a year. And if you did two deals in a month, you could make $240,000 a year. Now, I have a student in our WealthGenius program that did a wholesale deal where they made $240,000 on one deal, right? And so the sky's the limit here. You can make, and it really comes down to your understanding on how to put together deals. How do you put together deals? Do you understand how to put together deals? Do you know how to put them under contract? Do you know how to negotiate the deal? Do you know how to put the assignment clause in the right way so you don't get you don't get in trouble? Do you know how to find the deal? Do you know how to build a seller's market? Do you know how to do all of this? And that's the power of the community and the education.